some banks have already decreased their rates between anywhere from 0.2 to 0.5% depending on the fixed or variable term.
Yeah, it's good to see floating rates come down quickly. And so how does this impact people that are already on a fixed rate mortgage?
Wealth HQ, empowering you to take charge of your financial life.
7 weeks after dropping the official cash rate by 50 basis points, the Reserve Bank has done it again. Today, it's dropped another 50 points to sit at 4.25%. So what does that mean for you? Jason Lai is a seasoned financial advisor at Mortgage HQ, and he's got extensive experience in the mortgage industry. Jason can provide valuable insights into how this change could impact your borrowing options and the overall housing market. So Jason, how are the banks reacting?
The banks are reacting pretty quickly on this, Andrew. Some banks in particular have actually already made changes ahead of the drop because they did anticipate there would be some sort of decrease in the OCR.
Yes.
Some were predicting 50 basis points. There were some banks and some people also predicting an even more incredible aggressive 75 basis points. As we saw today, it was in fact 50 basis points. And as a result, some banks have already decreased their rates between anywhere from 0.2 to 0.5% depending on the fixed or variable term.
Yeah, it's good to see floating rates come down quickly. And so how does this impact people that are already on a fixed rate mortgage?
Basically, it would impact them in the sense that if they're looking to renew shortly, then potentially it'd be very favorable as, with the renewal, they can refix out lower interest rates and begin negotiating with their banks.
Yeah, and so people should be expecting the variable rates, if they're floating at the moment, would be dropping quickly. And if they've been holding out, then maybe it's time to look at fixing it.
I mean, we've got a lot of people that have actively chosen to float at the moment, anticipating this decrease, and I'm sure they've been very happy because we've literally just been pinged by several banks already about 0.5% decrease already.
Yeah, it's good that they do this announcement at 2 o'clock and the banks can send emails out quickly. So if people are considering breaking their mortgage, they've seen the lower rates now, what considerations should they have?
I think something on that basis that should be considered very important is potential break fees as well, because to put it on a very generic and high level, what you need to consider is the banks also fix in interest, fix in loans when you fix in a loan with them, and the difference being their profit margin. And so if they do stand to lose some money because you break your loan, that needs to be taken into consideration before you actually action that.
Yeah, I mean, break fees should be considered as an early repayment cost, right? And so usually you would only be breaking your mortgage if you've got like a reason to be doing it other than just interest rates. What reason would be people break their mortgage usually?
It could be a whole bunch of different considerations. Maybe they're in a stage of life where they need to consider another bank due to their servicing criteria, potentially banking products, potentially looking at, selling their property to upgrade or downsize. Could be a variety of reasons, Andrew.
Yeah, debt consolidation, I see, is usually something. If people are looking to refinance their mortgage, they might consider breaking early. And what help can people get towards those break costs if they do consider breaking that fixed term?
Well, I guess the nice thing is banks do also give cash contributions to all the people that are unaware. And so while these cash contributions will vary, at the moment you're looking at about 0.9% on your lending.
Yeah, yep. And so how do you think a rate cut is going to impact kind of the confidence in the property market? You're talking to a lot of people all day, every day about their investment plans. How do you think that's going to impact it?
I think it's going to impact it greatly because we've already seen test rates to date already decreased by about 1.5% thereabouts. And what's that meaning to your everyday person? Well, it depends on the person that we speak to, but this has amounted to in some cases a couple $100,000 in extra serviceability.
Yeah.
And as we see interest rates continuing to decrease over the coming months, that's going to mean the test rate decreasing further likely. And again, that's going to mean stronger serviceability. So while we certainly don't have a crystal ball, you can put two and two together to a degree, and one would assume that would mean asset prices increasing in the medium term.
Yeah, I mean, it's certainly encouraging if you're hoping your property price will keep going up. And if you're a homeowner, you can look forward and say, look, if property prices go up because borrowing costs go down, that's good for me. What does it mean if you're a buyer?
Well, what it means is that you have the option to have more serviceability now because the rates at which they're testing you on in terms of your affordability have now come down a touch. And so, generally speaking, it means you have access to higher amounts of borrowing power.
Okay, great. So if people want to talk to you about their borrowing options, what's your email?
Jason at mhq.co.nz.
No worries, man. Look, thanks for coming in today, Jason. Look, if you have questions about OCR or for Jason, leave in comments below, and don't forget to subscribe.
Financial freedom. Financial freedom.
Wealth HQ, empowering you to take charge of your financial life.